The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome now to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more do we go into the breach, dear friends. As we start the show off, what do we have? S&P's off, let's call it 12 points. Volume continues to be rather tepid. I suspect that we probably got maybe a small bottom around this level. It could be a little bit lower, but we're probably fairly close. I'm actually starting to dip my toe in buying some calls for after the FOMC meeting. I think a lot of people are starting to look at the brick exit, and I got to say that it's probably, for the most part, priced in. We'll talk about that today. We've got a bunch of other things going on, but for the most part, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
A little slow on the uptick there today, Mr. Engineer. We'll have to go on and on. Anyway, we've got a lot of stuff to talk about, but you know what? Let's get our history of the day out of the way, and we will move on and upward from here.
That it's all just a little bit of history repeating.
It is history repeating, and this day in 1951, the U.S. Census Bureau finally fires up its UNIVAC-1, the first commercially sold electronic computer. It had been delivered in 2.5 months earlier, but actually they flipped the switch, and it actually did something for the first time today in 1951. It was a division of Remington Rand, now part of Unisys Corporation. It made some big headlines in the election, or in the run-up to the election for Dwight Eisenhower a mere few months later. And why we take it for granted now about polls. This was one of the most documented efforts by the press to color an election. They did not want him, didn't think that Dwight Eisenhower should be president. But he had an absolute landslide in 1952. The press at the time did not like it, though, and buried the story. They ran many other headline stories when it agreed with their opinion and their bias for various political candidates around the United States. But they kind of just, it couldn't be that Dwight Eisenhower is actually going to win or even have a landslide. I think a parable for what we are seeing today, and that is the press is picking winners and losers and doing a rather poor job of even trying to hide the bias they have these days. If I was probably in the press in the last 2 days, I would probably have to resign on the poor job that they are doing. I know that they have a particular viewpoint, but at some point, I think if you have press in the title of what you do, you have at least a small modicum of ability to report something called the truth instead of, trying to color it because you want a particular candidate to win come November. It's just rather sickening, especially the last few days, seeing the blatant opportunity for just about everyone, and maybe even me commenting on it is also maybe a little narcissistic, but just looking at things lately has me a little queasy on the misinformation, almost worthy of Pravda in the last few days. What else do we have going on here? We talked about the British exit. I talked about it when was it, last Tuesday? Was it already last Tuesday? I think it was. And said that I couldn't imagine it was last Monday. So it's a week ago. Said that over the weekend I had looked at all the claims that everybody had made and couldn't figure out a reason in the world why Britain would want to stay in the economic union. All the current leaders that they had, their MPs that they elect, were basically eunuchs. They are unable to do anything. They are hugely paid off with a variety of ways, from getting first-class tickets that they can then buy coach and save and make a couple of grand every time they fly to Brussels, to all kinds of other things. Brussels also does not make them fill out an expense report. Just whatever they say goes. And of course, that's turned into a giant boondoggle of the EU that is nothing more than a thinly veiled version of them paying off the political elites over there. But as I said a week ago, we went through the reasons why. But unless you feel like if you're a fisherman, you are more than welcome to see everybody else in that area fishing your spot because, British just gave it away. It's unfair that you actually get to fish. But of course, if you're up there from Sweden, you can come down, fish all you want 2 miles off the British coast. And that's one of about 100 examples of them selling out their own citizens. And the idea that one huge bureaucracy can handle the rights of everyone, there's a reason why there's states here in the United States. And they kind of wanted to get rid of that to have their utopian view of socialism. But as Margaret Thatcher said, eventually you run out of other people's money. And of course, the EU is running out of money itself. And British only get, this year will only get 72 cents back of every dollar. We could call it pounds. 72 tenths of a pound for every pound they sent to the EU. It's a stupid deal. They are funding almost all of the EU. If they leave, everybody knows that the EU is kaput. And I don't think you can say anything other than that. I think the British in a year or two are going to relish the fact that they actually can make their elected officials once again accountable to them. Yesterday we reported just how insane Prime Minister Cameron had come out telling everybody that was retired that they would be starving in 6 months. You just have to know that people go insane when they know they're going to lose, and it's certainly a 7-point lead right now over the Remain. There's about a 2% difference in the expectations. So at least they have a 5-point lead over the Remains and the Leaves. So it looks like, unless something magically happens, that the 23rd, British are leaving the EU. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, no saving the Germans, but they did go to zero on their 10 years today at 8:30 London time. The yield hit zero and briefly fell into negative territory as investors continue to flock to safe haven assets. Bond prices and yields move in opposite directions, and a negative yield implies that investors are effectively paying the German government for the privilege of parking their cash. What could be more perfect than a sign that everything that they've tried has not worked? But you know what? It's all about one thing, isn't it? And that is just rejecting reality.
I reject your reality and insert my own.
That's correct. Anyway, just interesting. Of course, more over here on this side is the reaction to that. And of course, up 53 cents on the dollar index, 94.89. It looks to me, and we commented it on the show, that 93.80 level continues to be the critical level. I've opined, although I cannot prove, that there is a gentleman's agreement between at least most of the countries in the dollar index, that the dollar index is going to be somewhere between this 93.80 and the $100 mark. The question is, what will the dollar rising, not because it is so strong, but because the euro is so weak due to U.S. companies? And right now, I can't say that there is a huge indication to me that money doesn't continue to leave probably Europe in the short term and move to the United States. We may have a little bubble brewing, and that bubble is everybody leaving for the short term, waiting for the low tide in the European market to then snatch out all the cash in the United States and repatriate it right back into Europe yet again. So it's more of a market of whack-a-mole than I see anything else. And, with the very light volumes out here, I think you could be in real trouble. As I said before, I only have two positions that are longer term in the Tech Insider. I've got one very short term options position that I started today in the daily trading newsletter. I may add a few more tomorrow, but there's a few opportunities, but I'm not going to be having a lot of cash at risk. Options are an excellent way to reduce risk, not add more on just because they are cheap. And I would say right now, still, many stocks out here, the options are incredibly cheap, whether you're bullish or bearish, and a much better risk reward level. I'm going to risk less than 1% in a trade that could go and give me 4 times that back. It could also go to 0, but I am willing to take that risk. If I had all the cash in there, I might lose 10% if the trade went against me. It's very tough for me to understand why right now you would be parked in equities or even things like a ETF where you are risking a dollar to make a dime. I just can't see that and probably through the British exit. If there's a better way to go, bullish or bearish, I don't see it right now. Options are incredibly cheap, even at these levels, even with the spike in the VIX. Your risk reward has to be astronomically better with options, at least in the next few days. And with the huge amount of options available right now, going into Friday's expiration, they are not that expensive. Just a word to the wise and or the risk averse, as I am. Being a big chicken has its rewards in the stock market, i.e., you're here to play yet another day. We'll get right into charts here fairly quickly. See what else we have out here. I needed to answer some email from yesterday that I had not gotten to. And that was a question of Twitter, TWTR, said I would answer it here at the beginning from Bill. Bill does not say where he is from, so he is from Lutz, Florida, as many people are. The question is, what is your take on Twitter, short-term, medium-term, and long-term? Also, can you define from your perspective short-term, mid-term, and long-term what that will be, and will it be very helpful? Well, I have to go back to probably yesterday and the comments from LinkedIn. And the CEO, names escapes me at the moment, was talking mostly about the economies of scale used to be on millions of users, and now it's billions. And it used to be on whether or not you could make hundreds of millions, and now it's billions. And he thought that the best thing for his company was to get with Microsoft because it is a battle of titans these days. If you don't and you cannot have a company that's a $200 billion net worth company, you're probably not going to go against it with a $40 billion or a $30 billion net worth company. Some people think that Microsoft got the users from LinkedIn at a cheap price. I think that's okay. The real selling point, as Microsoft put it, was that they were getting the cash for free. If they think that LinkedIn can just double in the next 5 years, the worst case is that they break even. And I don't know if that's a compelling reason to get involved in another company because, of course, you can lose it all if it ends up being nothing. But that is almost the same kind of idea, I think, that you have to put over Twitter, at least from the big men in the street. Would someone buy this thing? No one's been able to figure out how to really not commoditize it, commercialize it. And that is very much like LinkedIn. They've made some money. It wasn't a huge money maker. The thought was that eventually they'd figure out a way to make a huge load of cash. it would be kind of like buying the Robb Report mailing list or the readers of the Wall Street Journal. You're probably not going to find a lot of pikers and people living under bridges reading the Wall Street Journal or the Robb Report. Probably a pretty good demographic for that. Twitter, same thing. You got a pretty good demographic. Probably not as good as LinkedIn, but you probably have a pretty good demographic with people that could make some ad revenue for you. So what do I see out here? I would have liked to seen this test at 1373 come in with a little bit lighter volume. I think this is right now is a coin flip on whether or not you've seen the last low. I would love to see the 1391, 1373 level on about 18 million shares to actually signal a low is in, a buyable low is. We'll talk more about this when we come back, but I think maybe there's one more flush out for Twitter, hopefully.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're kind of talking a little bit about Twitter. I have to say that if you are looking at Tiger TV or in the den on my chart right now, this is a very good looking chart. So I can't fault you if you've already decided to go ahead and pull the trigger on this thing. You had 22 million shares down on the 10th, and why it didn't touch that low, you can kind of make an argument that you're really up against this $13.91 low of February 11th. I just haven't seen anything that it really looks to me like a washout, probably what I'm thinking about. But again, this is a company that has a real hard trouble figuring out how to make money. Probably, at least the street consensus is that more than likely that this gets bought out by Google. Volume's up a little today. How long is it before Twitter sells out to Google? Into the summer, maybe? That's probably the tough part of it. It's not going to happen real quickly, I don't think. And when they talked about the buyout of LinkedIn from Microsoft, it started in earnest the first week of February. Not all of these buyouts take this long, and Twitter probably needs cash more than LinkedIn did. But, you know, if we're just now saying maybe this thing's getting started and we don't know, then maybe you could see this thing happen by August, a buyout. Unfortunately, that's a long time to sit around and wait, especially if the market turns against us. I would like just one more test to really tell everybody that 1370, 1390 area is the bottom of this thing, especially with this gap down. I've seen too many of these gaps get tested a couple of times, then go right back down to the low one more time, and then that's the final low. You know, if the market was, if I was extremely bullish thinking the S&P was going to 2,300 before the end of the year or something like that, I could pull the trigger probably right now. But I continue to subscribe to my theory that we are in the doldrums. We're going to be kind of moving around. The wind's going to blow one way for a couple of days. It's going to blow away the other way for a couple of days. We're going to have intervention from Fed presidents, from the Treasury, from everybody. And it's very tough to get a trend that's long enough, especially when you've got the dog that has fleas, that is being Twitter. So I would watch it carefully. If things actually turn around, market really starts looking good, we start seeing some stronger volume to the upside, that certainly would make me think a lot more positive about companies like Twitter and their like of a possible buyout or move higher. But, you know, come August or something, this thing continues to base out. I could see really being in something like this for a possible buyout. No one knows for sure. But I would think that it's more likely than not that someone wants to get into social media. Twitter is an easy way to do it. I just think that they're going to be very cautious about buyouts in Google. But you know, they just killed Nest off last week. So there's something to that. When we have Jeff from Kissimmee, Florida. For those that don't know, that's just outside of Orlando, and it's Kissimmee. But he wants to take a look at PPLT, and he says, perhaps we'll see Paul Revere's relatives riding through the streets of Brussels. We can only hope. Thanks for the smile you gave me today, Jeff. Platinum Trust, when we look at this, not bad looking chart, exactly what you want. You got your automatic rally off the June 2nd low to this June 8th high. You're back into it with light energy. You know, does this thing have options on it? Let's take a quick look. Okay. I will check. No, not really. Maybe. No? Man, why not? Too bad I couldn't. Maybe someone else has seen. I just don't see any here. Doesn't look like it. PPLT. Maybe the light volume just means there aren't any options on it. Maybe there's a better way to play that. I'm going to have to talk to Andy after we get off the show today. But maybe there is a better way to get a leverage play off of this. You know, so if you bought this at 92 and it went to 104, back up to the previous high, that's a 10% move. Again, I don't risk a dime a dollar to make a dime, and that's unfortunately the trade on this. You need some kind of leverage product for platinum. I'm not exactly sure what you could do. No options on this. So the only thing I dislike about it is that there's not a lot of asymmetry to the play, i.e. if you're right, you make a ton. If you're wrong, you just lose a little. You basically are going to win a little or lose a little on this particular one. Maybe there's a better way. Anybody in the den has any idea of more leverage plays with limited risk? Might be interesting. Andy Heck is IMing, saying there are no options on any platinum products. It is a tough trade. So what else can you say about that? Futures. Options on futures? Okay, maybe that's way. Are there options on those futures? He's IMing me in real time. Nope. Okay. Not a lot of ways that to have limited risk. Crap. So for me, the answer would be the risks are too high probably to play it. I do like, certainly do like the chart on this thing. Maybe there is a better way to do some kind of spread and get the kind of margin you want. I just don't know it off the top of my head. Maybe someone will figure that out, and we'll talk about it on a later show. But I need to make a great deal of money and risk a little. And that's why I kind of like this last week of options rollover. Whatever I'm going to lose, I know it's predefined. My upside is not a portion, but 100 or 200 or 300% for what I play for. And he's trying to talk me into it. I'm not buying. Not biting just yet. Okay. It's a broker issue. Anyway, we've seen a lot of this. The British could be coming to the streets of Brussels. Wouldn't that be nice if a lot of Americans just hired some guys to ride through and said the British are coming? Would be fun. But that's pretty much it. So we covered the emails. You can email me too, like the two brothers of the Power Trading Hour at path@tfnn.com. You can email me, of course, there. You can call me at 877-927-6648, or you can post a message in the den. Anyway, what else could we do out here? Oh, we'll start looking at some more charts. I had a bunch of movers. Oh, we're already out of time for this segment. We'll be back. We'll get into them. We got a lot of stocks to look at here. A lot of discussions. Maybe we'll talk about Baidu. Interesting chart when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Anyway, we're going to talk about a few of these stocks moving today. Kind of a real interesting move out here. I'm wondering if this is a real tick in Baidu. We'll have to see. Up to $170, back down to 160 today. Nice little hammer candle, lots of volume. I'll want to look at this closer, maybe. In fact, probably a good explanation of what you want to do. Your broker will be able to always give you time and sales for any stock. You can go back and look every tick that actually did trade. If you're talking about most stocks, you will find this on the NASDAQ website too, and you can go through every single tick and every single trade that single day to see whether or not something is true. If you see one share at 170, one share at 168, you know those are normally bad ticks out there, and you can take them out. Just not something I can do live on the radio. Maybe somebody in the den had been watching it, but I'll have to go through the time and sales and take a look at it, see whether those are real or not. What you do have is something that you can't really fake or put in a lot of, sometimes you can, but for the most part, volume does not come in accidentally. This is kind of back down toward the lows of the day. I think there was a lot of activity about Baidu because of Jack Ma speaking. And again, I think someone was asking me earlier in the week. I still don't have any reason to think that unless you want to short a stock, there's a lot of reasons to be long any of these Chinese stocks. There was kind of a damning indictment, even from one of the people at CNBC that is very high on these, that kind of said there's not a lot of reason to be long at Chinese stocks because, of course, the issues with their bookkeeping, and no one knows how those are going to turn out. Better safe than sorry. You do have high volume out here. You do have a stock that is a 3-gap play on a possible to the downside out here. You had your first gap and fill back in at the top. This is actually a fairly bearish looking chart, and I would not be surprised to see 139.61, that February 9th low, retested in Baidu. It does not look good. All the heavy volume does not look good. If this actually shows that truly this is what happened today, this also is a pretty horribly bad looking single candle. BP, one of the other movers, at least this morning, down. Volume has started to pick up, actually breaking through this level of congestion that runs right around that $30.50, 60 cent level. This does take us back into the candle of April 18th that had 1.8 million or 11.8 million shares. We already have 12 million shares. I think that tells you everything you need to know. There's a nice gap here between 29 and 29.50. Not a huge amount of volume, but that would probably be where I would be looking at next. If it fails there, you could get back into the 27 and a half. And then, of course, the low that's untested out here with higher volume from February 11th. So I think you still have a lot of reasons to think that these oil companies could significantly come back. And, of course, being British Petroleum, probably not a good thing for them with all the unknowns. Cadence Design kind of gapped down today. Not a whole lot of volume in that one so far. What else do we have? CRL, Charles Rivers Laboratory. This one's starting to dip down. I was kind of looking at this and see whether or not you had the significant volume and follow through that you would like once this thing started closing below the 9-day. You had an opportunity where it did kind of open up higher and then close lower on the 10th. But really want to see in the next day some real follow through on the downside of some of these stocks that have done nothing but go up for a while. What else do we have? HCLP, High Crush Partners, no big deal on that. KKR, let's take a look at that. And this one's kind of coming back down. What do we have on this? Down for light volume on this. It's going back into the May 19th low, $12.50, 5.5 million shares. Not too bad, 1.8 million shares. What do we have here? You know, to me, I'm looking at a lot of stocks. I just think maybe the low has come in at least prior to the FOMC meeting. Maybe we get it a little bit more before the end of the day, but we're awful close. And it'll be much more about what she says in that meeting. And, of course, the presser after that runs to about 3:15 tomorrow. What else do we have out here? Let's take a look at PBR. Now, this one is fairly ugly and suggests that you're getting at least back into the $5.25 range on Petrobras. This is the big gap, 30 million shares down there for that last previous low. We've got about 20 million so far today. Could you get 30 million? Maybe, probably not, though. That kind of sets up that area where if you were thinking about energy, maybe there is a level, but PBR at about $5.25, $5.30. Maybe even as high as $5.45, you'd want to be looking at that one. That kind of looks to me like kind of the bottom of the trading range in that one. What else do we have? Rio Tinto. This one's kind of breaking below too. This looks like these could continue to move back into these lower. There's two gaps down here in Rio Tinto. It looks to me like you could easily test one or both of these. That would take you back down to about $23. Take a quick look at FCX in this sector. Also starting to crack. Why this thing did extend and do a hyper extension, I kept on thinking that the right price to buy this one still ends up being around the $7.50 range. Of course, you would have missed a lot of the upside out here. But to me, that overextended. My guess is that this moves down to that $7.50 range. And after some consolidation, that would be the next great place to buy this if you could get it in that area. Let's see. Let's look at some of the other ones. I wanted to see how Microsoft is doing today after its big announcement yesterday. And kind of still into the trading range. Volume is pretty average. Let us put it that way. This did come back into the 49.35 yesterday, April 29th low, 48 million with 83 million shares. Of course, that was on the buyout. Did trade back up to about $50, just underneath it a little bit. You know, to me, this upper trading range still exists, which is in and just above that 48 and a half level. We come back, we'll start looking at some of those banks from across the pond and see how they did today. We talked a great deal about them yesterday, and we'll see how they're doing today. Give me a call, 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yesterday at the last segment, we talked a bit about these European banks. Wanted to see how they attacked their lows. And, of course, we're getting that information today. $14.78 on February 9th was the last major low for Deutsche Bank. And that had 10 million shares. We're into it with about 5 million shares today. So pretty significant retraction of volume. Just going to be very curious on how those are doing today. Of course, that's off a little, about 3.75% today, so not just a little. Let's take a look at BCS today. It's off about 3.5%. I think we commented this one is actually doing a little bit better, or was. Today, it is breaking its previous low of 3.4 million shares on May 9th with 6 million shares already. So that one's telling an opposite story. Credit Suisse, or Suisse, as it's spelled, was one of the other ones we saw breaking its bottom yesterday with some volume, 6.5 million shares yesterday, and today 4.6 million shares. That's going against the February 11th low of $12.56 with 4.4 million shares. So we're starting to get some information down here. The last time, of course, the EU was at this level. They brought all the guns out, and Mr. Draghi had his bazooka of cash, and he was kind of pointing it everywhere. It's kind of kept these banks in these lower trading ranges, but I'm going to say as a group, it looks like most of them are failing. Let's take a look at RBS, another one in that European banking sector. You really wanted to come in with less than, what's the highest volume out here? 2.3 million shares, which is the March 1st low. This has not broken all those lows, but at least you're back into it today already with 1.6 million shares. That compares to 1.6 yesterday and 2 million shares on the 10th. So you've got some volume down here, a little less today, but my guess is by the end of the day, we'll have 2 million shares on RBS, and that sets up a test of the $5.79 low from April 7th. So I would not be surprised. This looks kind of like the weakest part of all the markets. Not all of them could pull back a little bit, but for the most part, I think we've kind of set ourselves up for expiration. We may have a little bit more selling here before the end of the day, but I think we're probably pretty close to the setup into the FOMC meeting. I suspect we're probably going to bounce maybe late, last 30 minutes, maybe tomorrow, Thursday. Friday so far looks like a very flat day for options expiration. So I think we're going to have a very short amount of time, and we're going to have a lot of action. And that's through the FOMC meeting, through the minutes, through the 2:30 press release, and that normally runs to about 3:15. So we'll have a very action-packed last 30 minutes of the day tomorrow. Probably some sorting out on Thursday, probably a quiet day Friday, and then back into the British exit vote next week. So it's that Chinese curse. May you live in interesting times. Maybe you have, I'm going to give you a new one. May you have a very quick mouse finger, because that is probably going to be the most important thing over the next few days. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat time, same bat channel.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.